Welcome to my daily review. Today is Tuesday, June 17th, and you can see the Nasdaq daily chart shows a loss today of 180 points or 0.91%, and it closed at 19,521. You can see the volume was lower today. Tomorrow we have the announcement from the Federal Reserve on interest rates. It's about 100% certain that they're not going to move interest rates one way or the other. But with the jobs market weakening and inflation stalling, there's a scenario out there where a catalyst could be where they lower rates sometime in the back half of 2025, and that certainly would be a catalyst for the stock market as we all want lower rates. I just want to point out, that yeah, today we were down after an update yesterday. We're just kind of going back and forth here. We lost 255 points on Friday, got 294 back on Monday and gave back 180. So kind of a, little teeter-totter, ahead of the Fed decision tomorrow, which I think is a slam dunk. They're not going to do anything. And then Thursday's a holiday, Juneteenth, the markets will be closed. So, a little bit of caution ahead of that. And then we'll open up Friday and see what happens. But we've had a 32% rally from the trough there at 14,784 to today's close of 19,521. A nice rally, and you can see that kind of rallies up and gets in a little digestive phase, then rallies up and digests the gains here. Whoops, a little bit of a box there, rallies up, and then digests the gains in this little box type action. And now it's rallied up and it's kind of getting a little boxy here. A little, maybe 2 weeks of nothingness, just going sideways, and that's fine, just digesting gains. But in my opinion, I believe that it's still going to continue to go higher and take out that 20,204, which is really not that far away. What, like 900 points, less than 900 points. Anyway, and that's my story, and I'm sticking to it. And yeah, that's what I believe. And I don't mean to sound complacent because I understand that there's geopolitical news or noise going on, but I just kind of listen to what the market tells me because there's always going to be something to worry about. And as long as I've been alive, there's always been wars in this world. So, that's not a reason to not buy stocks. Anyway, yeah, that's it for the Nasdaq. I guess I'll go to the S&P 500. It didn't get hit as hard today. The 0.91% was the largest loser in the indexes. This one was down 0.84%. Once again, went up above 600, now below it. Talk about a teeter-totter here. It's like every other day. It's above it, it's below it. It's above it, it's below it. It's okay. It'll eventually, break out of this little box here eventually. I'm not saying when, but yeah, it's just kind of consolidating. These big gains. We had this big, massive run, and I know people are still a little hesitant to get into this market. I'm talking professional people. I subscribe to a lot of different, um, a lot of services, different services, and there's just a lot of non-believers in this rally. There's just so much negative stuff. I think people watch too much, TV or something, too much news because it's just all negative, and it's hard to believe that the market could go up with all this, calamity around the world. But so I'm just going to go through today and just listen to what the market's telling me, just kind of go over what the market's actually doing and kind of block out all the noise from all the nonsense. But definitely the Fed tomorrow is going to be, a big event. Just, they're going to parse every word that Jerome Powell says, but we know he's not going to move interest rates, not yet anyway. But I think that's coming, and that could definitely be a catalyst for the market. Today, this morning, we heard from JBL or Jabal. It used to be Jabal Circuits, now it's just Jabal, JBL. Nice response, a 9% move to an earnings report. So that's what we want to see. This powerful move, big volume coming in, driving this higher, this electrical contracting manufacturer stock. So good news on that front. And it always, I always look around whenever I see something like that. I looked at other stocks within that sector, and this is Flex up 3% today after kind of going sideways. We like this stuff, trading tight. Trading, tight near a moving average within a base. That's a beautiful setup. Move 3% higher today. Yeah, I should have probably had that one on my radar list, but I didn't. You could see the blue dot indicating relative strength. Let's take a look at the weekly because talk about knocking the noise out of stuff. This has got a standard buy point cup with handle of a 42.50, and it's just a tick above that, a couple of bucks. And I don't think you're chasing here, but you can always wait till it gets a little closer to that five. With today's move, more than a 3% move, it's now 2.6% above that five. So if you're interested in, an electrical contractor manufacturing stock, I would just wait on that one. CLS has been one of the leaders in this group, and that one is again 3% above its five. So a little bit stretched there. Not too bad, but a little stretch. And the other one that has a decent chart here is our friend Yuri and Jelko Solaf from Sanmina, the Croatian buddies. This one is 1.2% above its five, but very good looking chart here. A nice cup with handles, just starting to push away from its base. And what did you have here? A little shakeout, 3 day shakeout last week down to the 21, and now it's popped back above its five. So Sanmina looks pretty good as well. All right, I'm gonna move on to well, in a market in a market like this, we have a lot of rotation, right? I just showed you the Nasdaq would have been up like what did I say, 32% off the low. So it hasn't just been one group. It's not the lag seven. It's not all AI stocks or quantum stocks or energy stocks or space stocks. It's a variety of stocks. It rotates around. When you have a move like this, there's going to be on the index, there's going to be a lot of different groups that are performing well. And you can see now the Nasdaq closed 7.4% above this 50. So it's catching up. The 50 is catching up to the 200, so only 5.1% above the 200. So looking good. Like I said, when the shorter term moving averages blast through the longer term moving averages, that's usually a bullish indicator. All right. I was going to move on, talk about the defensive names. Defense was in play today. Defense wins championships. Defense is okay in the portfolio. These are typically slower moving stocks. So, the lower beta is okay. It fits in with your circle or your core weave stocks that are just flying and, pretty hard to handle. But this is RTX, formerly Raytheon. They merged with Allied a couple of years ago, Allied Technology, I think in 2021. Anyway, this one, had this little base, had a base here, ran up, and then formed another base here, nearly a double bottom, a double bottom in spirit, and pull back here to its 21 and now has been strong ever since. One day it pulled back to the 21 on June 11th, and it's just been really strong stock now. RTX is 2.3% above the five, so a little extended. Wait till that one pulls back. But there's a lot of stocks within the defense names that are really strong. This is KTOS, Kratos Defense. This is one that's on our relative strength list that I post every morning at the top of the page. And I'm sure that's going to change. You're going to have to look at it again tomorrow because, like I said, the rotation, some of these growthier names are getting whacked and they're going to be below their moving average, and some of these other names are going to pop up. So you need to look at that every morning and really decipher, those stocks. A lot of them are extended, like this one, but it's been running for a long time. That's why finding support at the 21 consistently, right? And this is what you want to see in a trending stock. Once it, broke above the 50 here, got up to that buy point 35.66, pulled back, there's your handle. As it pulled back at the 21, it continues to get support at the 21 here. And now it's extended if you want to buy it, but showing strength, something to watch to buy on a pullback. That's KTOS. And the last one I'm going to show, there's a lot of defense names I can show, but I'm not going to do it. Not going to do it. Um, and that's a L3 Harris Technologies. They recently bought a company, I forget which one. But inside week so far, just down 2%. You can see that, maybe forming a handle here. Let's see on the daily. I guess you could say that would be the handle there as it pulled back to the 21 last week. Find out what day that was, the 10th, the 11th, no, the 10th, the 12th, okay, the 12th. And then rallied up, now pulled back to its five. So it closed just a tick above its five. That one looks pretty good as well. Like I said, there's a lot of defense names that, I've been going over recently. Howmet's been one of them. That one's been fantastic. DRS Leonardo is another one, just surfing the 21, just riding it to higher prices. GE, they had an investor day today. I don't know, just flat on the session. Pulled back to the 21. That's a nice little bull wedge pattern there. So that one looks okay. There's just a lot of them. I'm not going to go through all of them. I'm not even going to go through any more. That's enough. I'm going to move on because, like I said, it's more defensive. It's a rotation into the defense and the oil and gas stocks, and you have to be open-minded and flexible. If that's what the market's going to give us, that's what we have to take. It's just like a football team. You're running your offense, and they got 11 men stacked in the box. You can't run the ball. You got to pass it, right? And conversely, if they're playing, 8 men back and got a light front, then you run the ball on them. Kind of the same thing. Uh, you just take what the market gives you. And this one went flat for a long, long, long time. I want to see what that looks like on the weekly. What is that, like a 5 weeks tight pattern here? One, two, three. Where did it close at this? 23, 3 weeks later, it's 23. There's 24 it closed, 25, and now today. It's at 28. So Comstock Resources, CRK. This is another oil and gas U.S. exploration stock. Looking pretty darn strong. Nice pop today of 9%. Did I have that on the ready list? No. Why? Well, because it's a little extended from its moving average, but certainly a lot of people want to buy that one. You can see it was up with volume today. So that one looks good. One that I do have on the list is AR Antero Resources, another exploration stock. Cup with handle pattern. This one is a little tighter to the moving average. I put it on over the weekend here, and it's had a good week. I mean, 2 days is a week. It's up 2%, but you can see it still hasn't really broken out, just kind of pushing away from that base. And like I say, these are slower movers. This is not core weave. But like I said, it's a rotation into oil and gas. The oil and the commodity prices are going higher, which is inflationary. But that's what the market's giving us, so that's what we're taking. If we're going to play the game, this is how you play the game. Otherwise, just sit on the sideline, but don't sit in growth stocks and get get your money stolen from you. This is Range Resources, RRC, another cup with handle pattern. Nice pullback to the 50 here. This one was on the ready list as well this week, and it's up more than 2%. So a couple of oil and gas stocks up 2%. That's all you can expect from these things. They're not going to set the world on fire, no pun intended. But if you watch Billy Bob Thornton and Landman, you'll have a better understanding of the oil and gas market for sure. This is a good show. Let me see what else we have. Oh, IMO. This is Imperial Oil. And this one, it looks extended here on the daily. It's, 2% above the five. But if we go back and take a look at the weekly, this thing's been consolidating for a long time. A couple things I don't like about it, like it's got no growth. These, red numbers are not good. The earnings have been going sideways for like 3 years. But, we're looking at, technicals here, not fundamentals. And technically, this thing looks pretty strong as it, formed this little double bottom base type pattern on the weeklies. It came down here, rallied up, then had another, lower bottom, and it's been straight up off the bottom here. So Imperial Oil looks pretty darn good. This is an integrated oil stock, but yeah, one that I'm watching. I didn't put it on the ready list, but anyway, I'm going to move on to EQT. This is a natural gas component here. It's an integrated out of Pittsburgh, Pennsylvania, which just hosted the U.S. Open at Oakmont. But anyway, this one had a 3 weeks tight. That looks like 4 weeks. Yeah, 4 weeks tight pattern. Broke out of it last week and ripped higher. It's up 3.5% this week. Did I put this one on the ready list? No, why not? Because I'm a dummy sometimes. I just thought, over the weekend, I didn't want to put too many of these names on, so I picked two. I believe I only picked two. And last week, Friday the 13th, there it closed 2.3% above its five. So, a little extended, not as tight to the five as I would like. But, this one is definitely, I don't know, it's still actionable on a pullback to the five. It still looks pretty good to me. PARR, PAR, par for the course. This one is a refiner, right? This one's out of Houston, Texas. If you're going to be a refiner, no better place than Houston, Texas. And this one you could see is it had this stage two, ascent, the Weinstein stage two, then you had your stage three where it couldn't go any higher for a long, long time here. Then it had a stage four decline, and now it's trying to break out of this, or it has broken out of this stage one. So it's in its stage two advanced phase. So that one looks pretty good too there, 2761. That's Par Pacific Holdings. Now I wouldn't be buying it up here. It's made a hell of a move this week alone. It's up 13%. So you don't want to mess with that. But just trying to show you some strength in the oil and gas, and that's just what's going on in the market. I'm just trying to point out the strength. I'm not saying to go out and buy all these or anything like that. I'm just trying to point out to where the rotation is in the market. What's going on in the market? Well, this is what's going on. And the last one's going to be ACDC, one of the greatest rock bands of all time from down under. This one rallied above its 10 today, up 7.28%. This is out of Willow Park, Texas, and it used to be Profrac, but IPO, then whoop, had that big stage four decline. Now it's had this like a stage one base phase, and now it's into this stage two advanced phase. So above $10, I like it, but I don't like buying stuff up 15% in a week. No, thank you. That's a big move. I said they don't move like CoreWeave. Heck, this is giving CoreWeave a run for its money. That's ProFrac Holdings, ACDC. Hard to forget that ticker symbol. Anyway, that's it for the oil and gas. That's it for the defense names. And I've got to get to the gold stocks. Anglo Gold Ashanti has been the leading stock in this group, for the past year. I don't know, it's up more than 100%. If we just go to 2025, I think we can get a better picture. This is a leading stock in this group, 109% this year. So in less than 6 months, this is the leader in the group, and I want to buy leaders. I want to own leaders, but you could see on Friday it closed 5.5% above its 5 EMA, so I couldn't put this one on the ready list. So I put another couple of gold stocks on this week, but this thing is now pulled back to its five, and I kind of like it a little better there, right about $47 here. If gold's up in the morning and this thing starts to bounce, that one would be something to look at. I put GFI on. This is not one of my favorites in the group because it doesn't have the performance like it's up 78% in the last year. Not bad though, huh? But it's pulled back to its 21. This one was a little tighter to its 5 EMA and a little closer to its pivot point. So that's why I selected this one. But, I'm not a fan. But if gold's going to go up, these stocks are probably going to go up. Wow, this thing's down 5.5% this week. What a dog. Boo. Oh, well, maybe it'll bounce off its 21. AEM is one of my favorites in this group. One of the leaders. It's a larger market cap stock, 62 billion. You can see the cup with handle pattern trading a little closer to its 5 EMA here now. It's just less than 1% above the 5. So this is one to watch for. And I'm not going to go through all of the gold stocks or the silver stocks. This is HMY. You can see it had a big run, and now this one's fallen out of favor. Silver name Mag Silver. This one's surfing the 5, looking pretty good here, forming that little ledge pattern. And the other one is PAAS, a silver play. Yeah, not doing too bad there, hovering around that 2860 buy point. And then of course CCJ. I believe this one's on our yeah, it should be with a move like that, 95% rating. Had an inside day today, but you could see the bounce yesterday off the 5, and it's up nearly 4% this week, and that's with a pullback today. Anyway, that's it for the gold. That's it for the silver. That's it for the oil, the commodities, the defense names. I'm going to move on to an area that I like. And I try to be flexible and open-minded, but these things tend to move a little faster, and they're a little growthier. They've got the growth numbers, that I like to trade. And as long as they're trending in the right direction, that's kind of the pond I want to fish in. Although I try to remain flexible and open-minded and take what the market gives me. This is Cloudflare net. Yeah, this is on our ready list here, 177.37. Actually wrote that one down. Yeah, cup. I would call that a handle, but I don't think Pattern Rec's picking that up as a handle at all. No, it's just a cup, but It's a nice pullback last week. Yeah, 4%. That to me is a 5-day handle. Anyway, it's, a pattern is a pattern. You're just splitting hairs. It doesn't really matter. I like net. I think it's going higher. I put it on the ready list there at 177.37. It's having, a decent week, up 5%. We'll take that. Heck, you can close the market now. I'll take 5% for a week all day long or all week long. So that one looks pretty good. CrowdStrike pulled back following its earnings report on this day right here, June 4th, 5.7%. It was really down a lot more. It closed at 60% of its daily range on June 4th. And you can see it's just been surfing its moving averages ever since, just trending higher, higher highs, higher lows. I believe it made a new high today at 493.20. So definitely one to watch. 500, if you're, doing the options, monthly. Your July monthlies at 500 probably be a pretty good strike price there if you're into that, short turnaround. As long as the market's doing what it's doing, we're in a strong uptrend. There's no reason, not to think that it's going to trade higher. CrowdStrike is a leader in its group. All right, Palo Alto Networks, another one that I believe I put on this. I think I did. Anyway, if I didn't, I should. I thought it's going to have trouble with 200. It had trouble with 200, and now today it broke through 200, closed at 202.05, up 2%. So that's a positive move. That's positive action for Palo Alto. I'm not saying it's going to stay above there though, because it could pull back and undercut it and do the teeter-totter like we saw with the, prior stocks that I showed. But it could also just rally right to 210, 220 and blow through that old 208.39, right? So that's what we're looking for with Palo Alto Networks. If you own it, this thing is just a beast of a company. Cash flow up the wazoo, return on equity, well run, well managed. Yeah, this thing is just one, I believe, for, a retirement portfolio. It's perfect for that. If you want a cybersecurity stock in your, retirement portfolio, a little slower mover. It's not a fast mover, but just a well-run company, steady, solid. Sales growth 12%, 14%, 15%. This is, yeah, just a well-run business. All right, I'm going to move on to a couple other of software names, not cybersecurity names, software Roblox. This one is just a monster. I thought I would have trouble with 100, and it still might, but it went through it today, and we didn't see Matambo around to reject it. So maybe Matambo's on vacation. And maybe this thing just keeps trending higher along that five. Just always know the relationship. Obviously this thing's been trending with its five for a long, long time. So know the relationship between the stock and the five, and that's the pattern, right? When it gets up here, 3.7% above its five, it wants to come back down. And this one here today, it's 2.8% above its five. So it wouldn't surprise me if it just came back down to that 100 level, allowed that moving average to catch up before you bounce. So, you don't, fools rush in. You don't have to rush into this thing. Be patient, be disciplined, wait for your pitch, right? Just don't swing at stuff in the dirt or stuff over your head. Get a good pitch to hit and hit the fatty pitch. All right, Palantir. This one I had on my red list as well. It's kind of precedent with this one because it has been a really strong mover. Just pulled back to its five today, 137.30. You could see the low was 136.08. It closed above it though. If we want to look at the different time frame here, maybe a 5 minute. Yeah, and it started up okay and then really sold off. And then the last couple of hours, we had some buyers into the close. Not a bad close for Palantir. And it's doing nothing wrong, just, pulling back to the five. Looks pretty darn good to me. And I think that's it for the software because there's a lot of other stuff that I need to get to today. Yeah, just quickly, real quickly here, the heavy construction stocks, man, Sterling had a nice move today. Quanta Services, this one, I don't think I have it on the ready list. I've had it recently, but I didn't put it on this week. Still like it though, and it still looks good, hanging in there nicely. And then of course, TPC, Tudor Perini has been a really strong stock, pulled back to its five today. And AGX has been really strong, and it pulled back to its 21. So this happens to leaders, right? This one was on our leading stock list, or excuse me, our relative strength stock list, and now it's not because it pulled back to the 21. And that's what stocks do. That's okay. It's healthy going forward. Get some of those profit takers out of the way, the weak hands, as they say. All right, a couple more before I get to our relative strength stocks. Reddit had this one on the ready list 2 weeks ago, maybe last week, as the 5 and the 21 rallied through the 50. That's bullish sign indicator, but it's below the 200. So I know a lot of people didn't want to mess with Reddit below the 200. And when it gets above the 200, then it attracts a different type of buyer. And so I put it on this morning. I think I put it on this morning. That 130.11 is definitely an area of interest, but it's now above the 200. I know it closed near the low of the session, 10% daily range. And when you get a stock that has this much overhead, right? Yeah, I mean, people bought it at 230 and 200 and 150 and 140. And so when it gets back to 140, they're going to sell it. I got back to even, yippee, I'm going to sell it, right? So that's just the way it goes. So we had a little probably short covering here the first half hour. And then profit taker said, hey, I'm just going to, I'm back to even. I'm going to get the hell out of here or just take my profits. Maybe I bought it last week, take my profits and move on to something else. But to me, Reddit still looks pretty darn good. Don't really like today's candle, but I understand it because there are a lot of sellers in here. This is not going to just go straight up. There's just too much overhead supply here, even though it's above its moving averages now. And what we look for is this 5, the 21, and the 50 to trade through the 200. And that's going to take some time, but I still like Reddit. And I believe in the growth story here. It's got the growth profile that I look for. And yeah, it's one stock that, yeah, I really like Reddit. So anyway, PEGA, I did put this one on the red list, and I believe this one's going to have trouble with 100. And it certainly did today. It's just kind of hovering there, went above it, below it, above it, just kind of doing that teeter-totter thing. At some point, it's going to break out above it. I don't know when, but yeah, I believe Pegasystems, yeah, nice growth numbers reported there, triple-digit earnings growth, 44% sales growth. So that one looks good. Elf on the shelf. This one I just wanted to point out, that had the big, move following its earnings report. I think it was 30 something percent, 34%. Yeah, 3 weeks ago, then had 4 weeks ago, 3 weeks ago, it had that the short stroke pattern. Then last week, man, made new highs, and this week it's just kind of inside this week. But I wanted to show this one today because it had, I was at the golf course and I looked at my phone. I go, man, this thing's down $5 this morning. It closed yesterday at 126.21. And 15 minutes into this session, it's at 21. Oh my gosh, man, this is like $5.50 down. Alpha's going to have a bad day, and it just fought back all day, man. That's your never give up attitude. His buyers came in. Some sellers at the close, and it closed lower, but a 0.5% loss is better than losing $5. And Elf to me still looks really good. And the last one I want to mention in software is KD. Obviously, cup with handle, trading tight near a moving average. I like that type of setup. So anyway, that's KD, not the basketball player. All right, I'm going to move on really quickly and just go through this list that I post every morning. ASTS here, yeah, it just looks like kind of an inside day in spirit, down 4%, but it had a hell of a week last week, right? As it broke out, 23%. It's still up 4.5% this week, even with today's losses. So, every sprinter is 22 to what is it, 22 to 42, nearly a two bagger in a very short period of time. May 30th to June 16th. Yeah, that's less than 3 weeks. So that one needs a little bit of a rest. And you have your steel stock surfing the 5. That's ATI. And this is Avis, which I don't really get, but this one's surfing the 5. So I don't argue with the market. This one's a strong stock. I don't know why, but it is. CRCL, I don't even want to put this one on here because it's just too wild. It's got a gap to fill, 134.72. Today's low is 143. So, this thing could come down tomorrow at 10, $15 and then rally up $20. I mean, that's just the way this thing is. It's a little wild, not for everybody. Doesn't even have moving averages yet, so be careful there. But it is on our um, um, relative strength list. Credo, this is one that I like a lot. Made that move up to 81 following earnings, pulled back to the 5, found support. Now, is higher today while the Nasdaq was down a lot. And it's up by 8.5% this week. So that one was on our ready list. And if you got it, hang on to it. You got a tiger by the tail there. That one looks pretty darn good. Groupon. Yeah, just surfing the five, super strong stock. How much is it up this week? 6.3%. Nobody talks about that stock, but they do talk about hims and hers. I just I can't get a whiff of this stock at all. I traded it while I was doing this, but then lately it's just been up and down, chopping me up. So I just kind of stay away from stuff like that. Bounced off the five, I guess you could say, or it traded down to the five and bounced. It was still down, nearly 1% today. Yeah, there's your trade lower, there's your trade higher, and this is back and forth. That you need Dramamine for a stock like this. It's all over the place. Hood pulled back today, finally. It's been making new high, pulled back, then it got up near a new high on Monday, 76.88, then pulled back. This thing looks fine though, just surfing the five. Robinhood looks good. I expect caution tomorrow ahead of the Powell remarks, which is 2 p.m. Eastern, 11 Pacific. So we'll look forward to that. LEU, another one of these nuclear plays, just surfing the five. Man, that looks good. Jeez. That's a Tom Petty stock. Will not back down. LMB, the HVAC stock. Another Tom Petty stock, surfing the five. Kelly Slater, whatever you want to call it. It's very strong. MP Materials. Man, they kind of have like a monopoly. I shouldn't say that, monopoly. They get antitrust lawsuit from the FTC. But anyway, broke out of this base last week, followed through this week, up 16% this week. Man, after a move of 18%, 19% last week. So no short stroke here. This thing's mooning. It's going to the moon. Anyway, it looks pretty good. NBIS. I like this stock. I like the pullback here. I put it on the ready list maybe too soon. It's forming this little, wedge pattern here as it pulls back to its moving average as the volume starting to dry up. So I like NBIS. SEZL, and this thing was sizzling. It needs to pull back a little bit, and it did, nearly 2% today. Made a new high above 150. Man, this thing is strong. But the five's a magnet, right? Pull back to the 21 last week, and it's just going to pull back to a five, but the five's higher every day. A couple days ago it was 130, 199, 138, 139 today. Yeah. So yeah, moving rapidly. SMR, another one of these nuclear stocks, pulled back to its five today. Hey, hey, what do you know? The five was at 39.45, closed at 39.24. So, maybe a bounce tomorrow or later this week. What else do we have here on our group? I'm just going to go through these quickly because I have something I want to get to. TEM pulled back to the five. TMDX down 2 days in a row. This one pulled back sharply today. So this is not going to be on the list tomorrow. And then TTMI. Too much information. Yeah, pull back to the five today. VRNA, the lonely drug stock here. Yeah, just surfing the five looks fantastic. And then Zscaler, the leader of those cybersecurity stocks that I showed you, having a little trouble at 300, but trying to push away here. It was a pretty impressive move today. It was down like a lot of stocks at the open. It just battled back for a nice $2 gain. So all right. That's it for me. Thank you for watching at mcstockcharts.com. We never give up. In honor of the great Steve Jobs, I have one more thing, and that is stay foolish, stay hungry, and stay humble. I want to compare because I'm getting a lot of, recently I compared eBay to CoreWeave, and I haven't done it for a couple of weeks, and some people are asking me about it. So I kind of put the chart up today and some direct messages that people asked me. So I just want to have this. I can always come back to Tuesday the 17th and just, go to eBay from 1998. And believe me, 1998 was not the rip-roaring rally that 1999 was. It was a real rough time, October, December to December for the stock market and especially the Nasdaq. But I'm going to go to November 17th, 1998, and we're going to take a look at eBay here as it came IPO. A lot of people were using eBay to buy and sell stuff. It was the hot new thing. It's a kind of like supplement your income, get stuff, sell it on eBay, make money. Woohoo! We're rich. Anyway, it had this little IPO base there around 50, 51, 52, and then it popped. I believe that was an earnings report. pop 12% up to 90, and then have this little, what you'd call a ledge pattern, and then immediately ripped up to 140, all right? So it went from 50 to 140 in a very short period of time. So there's your flag, there's your pole, excuse me, and then it flagged here for a few days and, made these higher lows, series of higher lows, and just kind of pinching in. This is some selling in here, but this is like institutional accumulation when you see stuff like this. So just put this chart, etch it in your brain when I switch over to CoreWeave here, because I want to show you, I'm just going to go through eBay first, and I'm going to show you CoreWeave as we compare. And precedent analysis is great until it doesn't work anymore, and then you have to look at a new model. So for right now, CoreWeave looks to me like eBay in 1998. And I'm just going to go through eBay really quickly here as it moves up. And you can see this rally. And when people say CoreWeave is up too much today, it's too hot, it's overvalued, it can't go any higher. You're going to hear a lot of negative stuff about CoreWeave. I'm just going to point out that, we were here at 140 when we flagged. And yeah, it went up to 234 like real quickly, right? Because the 140 here, what made this flag, um, November 10th, was, what, 14 days later, it's up to 234. Will CoreWeave do that? Heck, I don't know. It went up to 311 in a very short period of time. CoreWeave could certainly do that. And I'm just going to click through here on eBay really quickly, because it does pull back to the 21, pulls back to the 21. You think it's done, right? 321, just look at that 321 there. It forms a little base as we go through the first part of 1999, which was a ripper year, right? And then it had the stock split. I think, 3 March 1st. Yeah, it goes from 321, had a 3-for-1 stock split there as it's breaking out of a base, and then it goes to 107. And then, eBay continued on to be one of the model book stock winners. But yeah, it went from, what did I say, $40 to 321 in a very short period of time. Yeah, it flagged. It pulled back. This is where we are now with CoreWeave right here. Okay, this is like today's action right here. No, excuse me. This is today's action right here. Get a clue, Marty. But you could see, it didn't take it very long to go from, 140 to 234, and then from 234 on what date did I say that was? November 24th. Now you're looking at December 22nd. A month later, it's just 311. Okay, so yeah, pulled back to the 21, sure. There's going to be some profit takers, but that doesn't mean it's the end of the road. So I just want you to keep an open mind with CoreWeave as you look at this chart. I'm not going to do this again. I'm going to tell you to go back to the video on Tuesday, June 17th, and look at the end of the video because I do this comparison with eBay. It may work, it may not. Like I say, the there's eBay on today, which eBay's it's doing okay, right? It's a nice little flag. But now I want to look at CoreWeave, and here you go. Here you got your little IPO base, right? You know what I'll do is I'll make a copy of that chart there on eBay and put it on our list maybe this weekend or something. So here you have your little breakout from that 50 area, and it ran up. Where is this? 50 lows, 50, 56. Then it ran up, boom, breaks out. Had this nice little run, and it pulled back to 100. And that's when my buddies are like shorting it. I'm going, nah, I don't think you should be shorting this thing. It's too strong. I found support at 100. It just pulls back a couple of days, and it rallies up here to 166, and then it did the flag thing, right? Like I just showed you with eBay, right? So it was flagging, and now what happened today? It breaks out of that flag base. So what I expect going forward, I expect it to trade higher. If it doesn't, if it pulls back, if it crashes and burns below 100, then you're going to have to find a new model. But right now, it looks like an eBay of 1998. And yeah, this thing could go to 300 bucks. I'm sure first it's got to go to 180, 190, and 200. But I'm just saying keep an open mind. It could be eBay of 1998 and it might not be. So, time will tell. But we have a precedent. You have your high tide flag, which I talked about yesterday. This is William O'Neill coined this, and they made a lot of money off this type of pattern here. These are some of the strongest stocks And the market showed this type of a pattern. So I'm not saying it's going to work out and be successful and you're going to be rich forever and never have to work again. I'm just saying this one's going higher, and if you have like August 200 calls, yeah, they might fetch a few bucks for you. Anyway, that's what I'm doing. Thank you for watching. I'm just trying to share what's happening in the market. I'm not predicting anything, just showing you precedent analysis. There has been precedents before for stocks like this in a strong market. And we could be looking at December of 2025 saying, hey, I wish I would have bought CoreWeave at 50 or CoreWeave at 100 or CoreWeave at 150 as it sits there at 350 bucks. So just, trying to keep an open mind. That's it for me. Thank you for watching at mcstockcharts.com. We never give up.